How does the stock market exactly work 2023? Are you curious about how the stock market works? Understanding the inner workings of the stock market can be a daunting task for many people. With all the technical jargon and complex concepts, it can be hard to grasp how it all works. However, with the right knowledge and guidance, anyone can become well-versed in the world of stocks and investments. Hello viewers, welcome to my YouTube channel. Today in this video we will show you how does the stock market exactly work 2023. However, before we start our countdown, we would appreciate it if you would subscribe to our YouTube channel and also press the bell icon. So, let's get started. The stock market is a complex system that allows companies to raise capital by selling shares of their business to investors. When investors buy these shares, they are essentially purchasing a small piece of ownership in the company. As the company grows and becomes more profitable, the value of the shares also increases, allowing the investor to make a profit. Stock market basics. To understand how the stock market works, it is important to first understand some basic terminology. Stocks are often referred to as equities or securities, and the stock market is a place where these securities are bought and sold. The two main stock exchanges in the United States are the New York Stock Exchange (NYSE) and the Nasdaq stock market. When a company decides to go public, they issue an initial public offering (IPO) of their stock. This is the first time that the public is able to purchase shares of the company. After the IPO, the company's stock is traded on the stock exchange, where buyers and sellers can trade shares. Types of stocks. There are two main types of stocks: common stocks and preferred stocks. Common stocks represent ownership in a company and come with voting rights. Preferred stocks, on the other hand, do not come with voting rights, but they do have priority over common stocks in terms of dividends and liquidation. Market participants. The stock market is made up of a variety of participants, including individual investors, institutional investors, and market makers. Individual investors are people like you and me who buy and sell stocks. Institutional investors are typically large organizations like pension funds, mutual funds, and insurance companies. Market makers are firms that facilitate the trading of stocks by buying and selling shares on their own behalf. How stock prices are determined. Stock prices are determined by supply and demand. When there is more demand for a stock than there is supply, the price of the stock will go up. When there is more supply than demand, the price will go down. The overall health of the economy, news events, and company performance can all impact supply and demand. Market indices. Market indices are used to measure the overall performance of the stock market. The most well-known index is the Dow Jones Industrial Average (DJIA), which tracks the performance of 30 large, publicly traded companies. Other popular indices include the S&P 500 and the Nasdaq Composite. Investing strategies. There are a variety of different investment strategies that can be used in the stock market. Some investors prefer to invest in individual stocks, while others prefer to invest in mutual funds or exchange-traded funds (ETFs). It is also important to have a long-term investing strategy that takes into account your financial goals and risk tolerance. Market trends. One of the key factors that influence the stock market is market trends. These trends are driven by a variety of factors, including economic conditions, company performance, and world events. For example, a recession can cause a decline in the overall stock market, while a strong economy can lead to an uptick in stock prices. It is important for investors to keep a close eye on market trends and to make informed decisions based on this information. One effective way to do this is to track the performance of market indices, as well as individual stocks and companies. Technical analysis. Another important tool for understanding the stock market is technical analysis. This involves analyzing past market data to identify patterns and trends that can help predict future market movements. Technical analysts use a variety of charts and graphs to analyze this data and make informed investment decisions. Fundamental analysis. In addition to technical analysis, fundamental analysis is another key tool for investors. This involves analyzing the financial health of individual companies, including their balance sheets, income statements, and cash flow statements. By understanding a company's financial health, investors can make informed decisions about whether to invest in that company's stock. Risk management. Investing in the stock market can be risky, and it is important to have a solid understanding of risk management strategies. One key strategy is diversification, which involves spreading your investments across a variety of different stocks and asset classes. This can help to mitigate the risks associated with investing in a single stock or sector. Another important risk management strategy is to have a long-term investing strategy that takes into account your financial goals and risk tolerance. By having a well-defined investment plan, you can stay on track and make informed decisions about your investments. Market volatility. One of the key challenges of investing in the stock market is market volatility. Stock prices can fluctuate rapidly based on a variety of factors, and it is important to be prepared for these fluctuations. One effective way to do this is to stay informed about market trends and to make informed decisions based on this information. Conclusion. In conclusion, the stock market can seem intimidating at first, but with a little education and effort, anyone can gain a solid understanding of how it works. By understanding the basics of the stock market, including terminology, market participants, and investment strategies, you can make informed decisions about your investments and navigate the market with confidence. The stock market is a dynamic and ever-changing system that requires constant attention and analysis. In this article, we will dive deeper into the workings of the stock market and provide you with the information you need to stay on top of the latest trends and developments. So there you have it, a brief overview of how the stock market works. Understanding the ins and outs of the stock market can be a bit overwhelming, but with a little patience and effort, you can be on your way to becoming a savvy investor. We hope that this video has been informative and has helped you to understand the stock market better. Don't forget to hit the like button and subscribe our channel, and also share it with your friends and family. Don't hesitate to leave a topic in comment box on which you want we make a video in future. Keep learning, keep exploring, and keep investing.